The United States has added $1 trillion in debt in just 48 days, nearly $21 billion per day. And that brings the total federal debt close to $38 trillion, 5 years ahead of earlier projections. In fact, Washington posted a $291 billion deficit in July alone, the second largest on record for that month. Deficits for this fiscal year are already running at $1.63 trillion, up more than 7% from last year, and on pace to exceed $2 trillion. In fact, the government spending has surged to 44% of the GDP, levels unseen since World War II and the 2008 financial crisis. Revenues are growing at just 2.5% annually, while spending jumped nearly 10% last month. This contradicts Trump's cost-cutting initiative under Elon Musk, which has failed to cut costs and ease the U.S. debt crisis. Analysts note that this is a spending crisis, not just an interest rate issue. Interest costs are now greater than defense or Medicare spending. Rating agencies, including Fitch and Moody's, have downgraded U.S. credit, citing a worsening fiscal outlook and rising governance crisis. The Congressional Budget Office projects federal debt held by the public will climb to 107% of the GDP by 2029, surpassing the World War II peak. In fact, global investors are warning that higher debt may eventually demand higher borrowing costs. Some policymakers have floated tariffs to plug the gap, but economists are arguing that they had inflationary pressure and do little to slow deficits. With the political gridlock blocking fiscal reforms, analysts caution that America risks sliding into what some call a debt spiral, threatening long-term growth, fiscal credibility, and the dollar's global dominance. And for more on all of this, we are joined by Greg Swenson, economist and founding partner of Brick Macadam, a London-based merchant bank, also the chairman of Republicans Overseas UK. Let me just begin by asking you for your comments on the US adding $1 trillion in debt in just 48 days. What really explains this acceleration, according to you, and how unusual is it really as compared to the past cycles?
Yes, it sounds like a pretty alarming number. I think part of it is due to just some effects from the calendar. There might have been a surge, or there might have been a particular payment made or something like that. So I try not to look at the short term, but if you look, there's no doubt there's a spending crisis here. If you look at the annual deficit, more importantly, of at least 1.6 trillion. These are phenomenal numbers, and they have to be fixed. It's going to take some real structural changes to do that. But yes, we are approaching a debt crisis if we're not already in one.
Analysts are arguing that this is a spending crisis, not an interest rate crisis as such. Do you agree with that? And how much of the debt spiral is structural overspending versus high borrowing costs?
Yeah, it's a great point. And surely it's the spending, not the interest rates. Yes, the higher interest rates do hurt. They've basically double what they were 4 years ago when President Trump last left office. So, that doesn't make it easier. And yes, the spending the servicing the debt, the debt service, or making the annual interest payments on the debt is, as you mentioned, $1 trillion or over $1 trillion a year. That's more than defense spending. That's more than Medicare. This is really difficult, having the higher interest rates. But if you look at it historically, the interest rates aren't that high. So it is truly the deficit and the spending problem that's created this. I mean, just in the President Biden's term, he jacked up spending an additional $7 trillion. So there's an additional $7 trillion in debt just from 4 years of President Biden. And then, of course, prior to that, you had the COVID crisis, which required massive government spending in 2020 in President Trump's last term. Now, prior to COVID, the deficit was $1 trillion a year. That's still way too high. But President Biden basically doubled the deficit from $1 trillion to $2 trillion a year. It has to be fixed, and it can only be done with long-term structural reform basically in cutting spending and growing the economy, which will grow the tax base.
Some policymakers, in fact, are pointing to tariffs as a fiscal fix. Why do most economists reject that argument?
Well, in terms of why they reject it, it's probably because most economists are progressive or quite liberal. So it's really, taking their political view and translating that into empirical science, which doesn't really work if you look at the details. So the tariffs will help. That's not the final solution. It's not going to fix the spending problem or the deficit problem. It will help, though. I mean, $300 billion a year with a $2 trillion deficit, that's something. That's 15%. So look, I think it's important to have those revenues. It will help, but I do think that spending reform is the only way to fix this. And of course, growing the economy. The Secretary of the Treasury, Scott Bessent, is doing a great job so far. He understands that growth in the economy, which means wage growth, which means higher tax receipts, is really the only long-term structural solution here, in addition to spending cuts.
All right, we're leaving it there for the moment. Thanks very much for joining us.
Thanks for having me.
To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.